Hey traders, welcome to another episode of Charts and Coffee. I'm Raghee. Great to have you here. Happy Monday, everybody, February 22. We're going to kick off today's Charts and Coffee with a review of the calendar, because we've got an interesting calendar coming up. And then we'll take a look at what kind of mood the markets are in as we kick off this week. All right, so actually, let's step back and talk about a bigger picture calendar. And this is straight from the Stock Trader Almanac. And, the one thing that history may not be able to properly put into these seasonalities are things like the rate at which the Federal Reserve continues their bond purchases and et cetera. I mean, so those are things that are just not going to be factored in. However, that being said, the week after the February expiration week, the Dow's been down 12 out of the last 22. So 50-50 mostly, but up 7 out of the last 9. That's a little bit more relevant because monetary policy, I think, since 08 has been very different than monetary policy pre-08. So I think some of these historical composites that are more recent, sort of heavier weighted to more recent composites are more applicable to where we are right now. So keep that in mind. I don't know that it's not going to be an up week, but before we get too far ahead of ourselves, let's take a look at the calendar, because this is going to be really where the conversation is going to take place. Now you'll notice that, let's scroll down to, all right, here we go, tomorrow. So this used to be known as Humphrey Hawkins testimony. I don't know if they call it that anymore, but if you've been a trader for 10, 20 years, this is the semi-annual Humphrey Hawkins, usually happens mid-February. And this is when they testify about the economy and monetary policy in front of the Senate Banking Committee. It's 2 days, as you can see here and here. So 2 days of testimony. Now, we can get really, look, I think at the end of the day, we can probably just focus on whether or not there's any signal that the Federal Reserve wants to slow down the bond purchases. That's all the market's thinking about because, look, the equity markets have actually recovered. The economy has recovered in a significant way. And so what you have now is, here we go. What you have now is arguably an environment where the market might think, hey, does the Federal Reserve need to continue the bond purchasing at the rate they're doing it, which means do they need to continue printing at the rate they're doing that? Because M2 money supply then is a really big factor, or even, I won't call it a leading indicator, but it could be to those asset purchases. So is the Fed going to stop buying? And the equities markets would hate that. So I wouldn't be surprised to see a little bit of hesitation in front of tomorrow's day one of Humphrey Hawkins. So again, this is where all ears are going to be on whether or not there's any signal. It still is a 2022 event, which is far enough out where the equity markets may not worry about it. But if there's a lot of harping on it, watch for maybe a little bit of weakness. Now, weakness in the context of what? Take a look at the overall markets, gang. I mean, really, just take a look at where we are before you look at the fact that we've had a few down days in a row. I mean, we do this again. Heck, here comes a markets in turmoil special, right? But reality is we've barely nicked the 21 exponential moving average. We haven't even moved down into the wave. We haven't even done something similar to what we did in January. Not that I want to see that, but some of my best opportunities to the long side were in that sell-off. So everyone talks about buy the dip, right? Buy the freaking dip. We always hear that. That's the battle cry. It's the mantra. Well, how do you buy the dip? Right? How do you buy the dip? We need to have a discussion on that sometime. The first thing, the precursor to buying the dip, is making sure the environment is worthy of that retracement buy, that retracement long position. I would still call this easily within the framework of that. Okay, so that sort of sets the tone for me for the week, or at least until through Wednesday's day 2 of Humphrey Hawkins, and then we'll see how the market what we'll see is on Thursday, don't be surprised when you start to see all the other Fed members come out and force to sort of clarify any misunderstandings that the market might have construed from 2 days of testimony. So rocking some, what do we have in here today? Oh, medium roast death wish. That's what we got going on here today. All right, so let's get to the questions. That kind of frames out what we're looking at. Yes, bigger picture, I still believe we're in a macroeconomic environment of reflation. If that reflation's gotten a little too hot, then we'll definitely see whether or not the market's really concerned about how much more the Fed's willing to do. All right, so let's get to it. Questions. Great to see everybody. All right. Here we go. So question number 1 coming up. Good morning. Can I take a look at AJG and DHI? Sure. AJG, I'll pass. Not that there's not necessarily a decent momentum break here. I would shorten the time frame because there does seem to be a pretty fresh break. If I were to drop a volume weighted average price from one of these swing highs, I'd say I'm pretty sure we're probably breaking. So what I'd say is shorten the time frame, play the intraday trend, and see if you can't play maybe a 60-minute time frame intraday until this turns back into an uptrend. And by the way, if we have a market that's still yellow, as you can see this is, my advice usually is twofold. Either shorten the time frame and play the intraday trend of the breakout, or in a case like this, I would say, I'm going to be a little bit more conservative and say, hey, why don't we wait for a trend? But yeah, now here you got a trend. So did your short-term time frame, maybe 60-minute, maybe even 15 on AJG, on DHI, which I actually like DHI a lot. DHI is weighted within a sector that I'm going to be doing a whole lot more homework within. I love the way in which most of the Fed's monetary policy is going to continue to benefit the likes of XHB and ITB. DHI is part of that narrative when you look at the sector, when you take a look at the boats that are within that tide, within that sector. So this is a really good looking chart. And by the way, gang, that is a dip. That is a dip. Double green, moving into the wave. That's how simple you really want to be able to make your trading. The less subjectivity you have in your trading, the better. So start with making a trend the most clear, objective thing you can identify, right? Find a really good way to do it. We do it with a series of moving averages. I'll layer on top of that an understanding of different price-based volume levels. But that's a nice looking chart, and I would definitely keep that one on your radar, my friend. All right. Next up is good morning, everybody. Line Watcher, do you think we'll continue to see continued weakness this week? I kind of, in fairness, we kind of talked about how we don't want to front run whatever's going to come out of Jerome Powell's mouth. I don't know. Look, they don't want to purposely drive the equity markets lower, although if they were to send the markets lower, to me, that could be a nice buy, a la what we saw in January. So it's really going to depend on Humphrey Hawkins' testimony and how the market perceives that. And then if there's any cleaning up that the Fed needs to do by way of its other members, I think Bostic's on the schedule. I won't be surprised to see Williams. I'm trying to think who else is on the schedule for later this week, post Wednesday. And that's where you might see the message tightened up and any fears calmed. So do I like the idea of, say, the QQQ? Look, I'm with you there, my friend. If I can get a pullback, QQQ is interesting, although tech has been struggling a little bit more. What I would say when it comes to QQQ, and we're going to talk a lot more about this particular topic, so thanks for beginning the conversation about this one, Line Watcher. We're going to talk about this a lot more in the Sector Secrets live trading today at 1:30, so 1:30 into the close. So I'll give you a little sneak peek of what we're going to do. We're going to crack the QQQ or the NQ futures open and ask ourselves, all right, what's a relative outperformer within this world? And I'm going to not only think about XLY and XLC and XLK. We can get down to the individual stock level, but let's also keep in mind the likes of CLOU and SMH, especially SMH, right? So in the situation, so there's two ways to approach this market right now, and there's two parallel watch lists that we've got going in Sector Secrets. And one is, hey, what are those stocks that are heavily weighted within the broader averages and in the sectors, the tides, right? And what are those stocks that are not? So we could have these parallel watch lists going where I've got these more correlated names, and then I've also got these uncorrelated names. And uncorrelated names really aren't going to care as much about whether or not bond purchasing continues. They're not going to be as sensitive to the words coming out of Jerome Powell's mouth. So that's the way I would look at that. But I'm with you. I am looking for those pullbacks, my friend. Absolutely. I am not bearish on this market at all. I think that there's probably, because of the seasonality, right? We talked about that early on, because some of the seasonality that's factored in. Actually, one of the notes here on the Stock Trader Almanac is this is the 5th worst week since 1950. So are there going to be traders out there knowing that 12 out of the last 22 have been down? I'm going to look a little bit more at it, 7 out of the last 9 going up. But I think because of the seasonality, like I'm reading from the Almanac here, and the fact that we are still near those highs, you might see some traders that are going to want to sell into rips. In other words, this is really important. Let's say the S&P rallies higher. When you got this kind of seasonality coupled with the fact that we're trading at these highs, what's going to happen is traders who are looking at the market pulling back a little bit more substantially, or at very least exhausting, the more that we start to travel higher towards the swing highs, towards the minor highs, towards these highs that we're seeing, the ceiling in the market, they're going to want to build a short position. I'm not saying it's right or wrong, but heads up for that psychology. I think you're going to see some traders try to take advantage of that. Now, I'm on the other side of that, and I'm not rooting against them. But if we can go lower, then I do want to be a buyer. And remember, I don't necessarily need the market to make new all-time highs. Let it pull back and just retrace its steps. Even that would be a fabulous trade. And a lot of trend followers would do themselves a lot of good to think about not expecting brand new highs when they get long, rather waiting for the pullback and just waiting for the market to retrace its steps. So thank you for the question. Good stuff, Len Watcher. I appreciate that. All right, let me get the next question here. Good morning, everybody. Good to see everybody. LBK, I hear you. Look, LBK, I've been buying dips for 34 years, so maybe I've built a little bit of a titanium-lined stomach, but it's the trust. So let me give you a few things to maybe start to rewire in your brain. Number one, we like trends. Let's just forget the markets. The little part of our brain, the lizard brain, whatever you want to call it, we like trends. The brain is wired to look at what everybody, think of biology, right? What do? We just sort of follow everybody else because we figure if the group of people are doing that thing, it's probably safe. All right, if my fellow cave people are eating those berries, and I see a lot of people eating those berries, it's probably not going to kill me. I know it sounds silly, but it's still how the markets work. If everyone's doing it, there's safety in those numbers. If everyone's eating that plant, probably not going to kill me. So now let's step back into our stochastics and our moving averages and our macroeconomic, and we still like to go with the trend. It's kind of like middle school, right? Who didn't wear parachute pants? Stupidest things ever, but we're just kind of doing like everybody else. So there's a safety in that, right? We don't want to be that person outside the group. And yet, in a weird way, in the markets, you're rewarded for that, but you still need to pay attention to the group. So how do we make this practical? If the overall trend is moving higher, LBK, you need a visual way. And it doesn't have to be my way. My gosh, there's so many ways to play the markets. I'm only going to share with you what I do, but I've simplified this to colors. Why? Because my brain has to see it simply and clear. And if it's simple and clear and I see it often enough, the repetition is going to make me trust that the probability, not the certainty, but the probability of the continuation is higher than a reversal. V tops and V bottoms, gang, U tops and U bottoms are really what I believe to be, again, 3 decades of staring at this stuff, unnatural. M's and W's, a little bit more hesitation, a little bit more chop. It's usually a more of a distribution market trend, something Charles Dow taught about over 100 years ago. That's more natural. So, and also remember, the path of least resistance is up. So when the market does something like this, it's easier for me to say, look, the Federal Reserve is still printing money. They're still buying assets. And even if they slow down the assets, we still have a lot of money looking for a home out there. Where's it going to go? I mean, where's it going to go? Yeah, Bitcoin, gold, whatever. But if you're looking for a return, where are you going to put your money? The Federal Reserve's actions and policies have pretty much siphoned us into, we've got to be in stocks, ETFs, whatever. We've got to be there if we're going to see a return. There's really nowhere else to go unless we're going to go defensive. And I don't think this is an environment where we go defensive. So however it is that you need to trust the trend, that's where you got to be. For me, color coding, macroeconomics, Fed behavior, and just trusting that healthy trends correct and being in on that correction. Every move down is not a reversal, gang. And you know what? You know the easiest way to not throw up? Turn the TV off. Turn those knuckleheads on television off, right? Anyone who's got that much time to be spending yakking on television, I've talked about this before. You know how long it takes to prepare and be on TV? It's a pain in the neck. So that's not much less time that we're actually prepping for market behavior. Yeah, turn off the television. That's my best bit of advice. AJ, how do I know that the dip isn't a market reversal? Same question, AJ. I hope that helped. Yeah, LBK, AJ, I hear you. Again, nobody knows. Nobody knows. But probabilistically, if you treat a market's correction that's in an uptrend as simply a market going on sale, probabilistically, you're going to be right more often than wrong. So if you're always worried, and not you, just in general, if we're always worried about being caught up in a reversal, we're never going to take the pullbacks. I've been buying pullbacks for nearly 400 points in the S&P, right? If I'm worried about that one time when we finally make a move and I get stopped out, I've missed out on hundreds of points. So think about it this way. Your worst case scenario for loss is the distance between wherever you've bought and a level just below the 34 EMA low. It doesn't always have to be that stop. Sometimes I'll use alternative volume levels, but just kind of in your mind go, okay, what's the worst case scenario, or at least a defined risk scenario? Maybe I bought at the 13, maybe I bought at the 21 EMA, but I'll tolerate risk down to the 34 EMA on the low. And if you can deal with that without reaching for the Dramamine, I think you're going to be okay, my friend. I've spent a lifetime nearly doing that. All right. Okay, so let's see what else we have here. What commodities do you rotate into now? Scott, I'm going to be focusing on ComDolls, so Australian dollars, Canadian dollar, New Zealand dollar. I still like the British pound very much. Now, you say commodities, I'm going to think the whole futures world, but let's get into grocery store commodities. So corn is still near the top of my list. Beans, and really the bean complex. You can look at oil as well, but beans are near the top of my list. Cattle. So those of you that have been following me on the simpler futures side, you know that we're long pound, corn, beans, cattle, and let's see here. And then we also have, got way too many notes on my desk right now. We also have some interest in other markets that are relative outperformers right now. Copper, hello, copper. That was probably the first commodity that we sort of, as you said, rotated into, copper. And by the way, Freeport-McMoRan, I think we just did either it's coming out or it's going to be coming out soon. I think this week. How I trade Freeport-McMoRan. For those of you that maybe aren't futures traders, the CORN, SOYB, and then FCX as a stock proxy to copper. And there we go. Hogs are on the list. Of course, crude. I mean, energies, CL and RB, those are all going to be benefiting from inflation. Let's see. We just set up in the free video last week a long position on a technical fade in gold. So those are some of the markets that I'm in right now and watching. So I don't know if it's rotating because we are a little bit more established into the reflation trade, but that's my watch list for commodities. And the cool thing about commodities is that, gang, we only have to scan through about 12 or 15 names in terms of liquidity and trend in order to manage that market. So it's not a time-consuming market to swing trade. So I love doing that. All right, guys, and gang, just like that, it's 9:20 and we are getting ready for the bell to ring. So I'm going to head on over to the Sector Secrets and Simpler Futures room for the morning. I'm not 100% sure yet. I may be in the options room this afternoon. But I'm definitely going to be doing our monthly live trading from 1:30 to 4 p.m. in Sector Secrets. So if you like the kind of stock trading we're doing, go check it out. I think it's simplertrading.com/sector. I really should have these things handy, but that is what we're prepping for. And if we get that pullback, we're going to be pretty darn busy. So pretty stoked about that. Have a terrific day. Heads up for Humphrey Hawkins Tuesday and Wednesday, gang. Heads up. Those are 2 caution days coming up. All right. I'll see you tomorrow. Same time, same station. Be good to each other, gang.